Hi guys, I want to show you my strategy for intraday trading. Okay, now this is a pure price action strategy and involves you looking out for some few basic things and you are good to go. Okay, now let me explain in details. Okay, mostly you deal with the 4 hours time frame, right? And you can switch to 1 hour 15 minutes for multi-time frame analysis. All right. Now, what this indicator means is that they show you the current trend in the market. Okay, when it is red, is a downtrend. When it is blue, is an uptrend. Right? Once you get that, it's good. Now, these lines, okay, are price action line. You can see they are attached to each price on the chart. So this thick line are all number. They mark the like 0.75,000, 73,750, 72,500. They mark all number 0.70,000. They mark all numbers. And these numbers are psychological level whereby the market has the tendency of reversing. Okay, you see over time that the market are respecting this point. This is an expectation, a quarter theory, whereby the market is respecting this level. It fails to go above 73,750. That's just the meaning. Okay, you can see here for several weeks the price fails to break this 75,000 level. Okay, you can also see the market rejecting on 72,500, and this happens across all pairs. Okay, see the market rejecting on 75,000 level. You see the market breaking through, then doing a reversal and rejecting on 75,000. Now the market might probably bounce off from 72,500 from here also. So these are psychological level whereby the market player are looking to reverse or push the market. Okay, so once you know how to take your play around these numbers, now you are good to go. So you can see a quarter theory also, the market bouncing up from this 75, 750 points. All right, now let's go to the core of the strategy. The core of the strategy. Okay, you wait for this market to do the bullish movement. Okay, till it gives you a high. This is a peak formation high. A peak formation high also means like a swing high. When you are doing your price action analysis, the market continues to move forward to give you higher high, higher low, higher high, higher low for you to know the uptrend or the market is in a downtrend. Okay, now this is a swing high. What you wait for is to see the last bearish candle before this swing high. So this is our swing high. Okay, this is the last bearish candle. Okay, so just wait for the next candle that will break your other block. This is other block. Wait for the next candle that will break other block, then you pick yourself. Boom, you are sweeping it in profits. It's about 120 pips. Okay, it happens all the time on the chart, all the time. This is a swing low, right? A swing low. You wait for the last bullish candle. Here is the last bullish candle. Okay, after the break, boom, 76 pips. Okay, it happens on all pairs. Let me show you another example. Okay, this is your swing high. Wait for the market to give you a swing high. Then the next step is to wait for your other block, which is, in this case, this is an uptrend, right? Our trend indicator is showing blue. This is an uptrend. So you wait for the last bearish candle before this other block. So wait for it to be broken. Okay, after this, you pick your entry, and then you have about 60 pips in profit. Okay, now here is the deal. You will always get this kind of setup every week, and any week where there is no setup, you can use your price action strategy to get your entry. Okay, for instance, now probably there's no swing high this week. Okay, now you can extend this to see, because this is a bearish setup. What this means is that this market is in a downtrend. Okay, you can see this is a breakout coming back to retest the other block. It's another entry for you to enter the market. Okay, then you can also draw your trend line of for you to get your appropriate entry. Can you see that? So this is purely price action. Now this is a level whereby you're expecting the market to reverse, because this is an hesitation point where the market has been bouncing up for a very long time. market has been bouncing up from this level from a very long time. Okay, from a very long time, and this is a breakout. You know, very simple strategy. All right, here now you'll be waiting for the market to give you a swing low, get your order block, and then you go for your buy. Okay, let me show you some of the trade I picked today. All right, so here is my peak formation low. Okay, and I pick my buy. There is a peak formation low, and I'm going for the buy. Peak formation low. Now, this is a good setup because this is going to be a long trade. So, peak formation low, first condition satisfied. Second condition, order block, which is the last bullish candle, okay, which was broken. So, I'm expecting this market to get to this whole number, 87,500. So, my TP will be at 87,500. TP at 87,500. Trust me, this market is going to this level because it actually rejected from, you see, these are necessitating points, and we have, you can call it a support level, but I see that as hesitation point because the market is bouncing up from a key market level. All right, bouncing up from a key market level, and you still get to this place, probably break this whole number and get to the next hesitation points. Okay, here is the card. So I'm looking for a sell on this because this is my big formation high. So probably there will be a reversal to this hesitation point on USD CHF. I'm going for a buy. This is my big formation low. Big formation low. Wait until your order block is broken. Okay, it broke the order block, coming back for a retest. Trust me, it's going to be a buy. All right, so the buy will still be active to the next hesitation point or probably to this level here. Okay, now how do you validate your entry? I validate my entry coming down to the lower time frame, 1 hour. Okay, on 1 hour I want to see the trend pattern change. Okay, after seeing my peak formation low on 4 hours, I want to see my trend turn to blue. Okay, over time you see the market moving to the upside. All right, and this downtrend is already broken. This downtrend is already broken. You can see downtrend broken. Okay, so it's a good uptrend. All right, you can see the trend. Okay, when it is red, it's a downtrend. When it is blue, it's an uptrend, and it continues like that. Okay, CAD CHF, you can see it's now changing to be an uptrend because our trend is now changing from being a downtrend to uptrend now. Okay, you can use any technical skill with this, any technical skill. Okay, now this is a support level because the market fails to give us a new low. Okay, now giving us new higher high, and this is a triple bottom. The market giving us a triple bottom here. All right, so this is going to be a massive push up. All right, okay, the same thing, the color is already blue, so which is telling me that this is going to be a massive buy, guys. All right, now the color is changing red. You can see it broke this uptrend, this massive uptrend. It broke this uptrend, and you can see, call it anything. Some people say head and shoulder formation, head and shoulder, wait for it to break your neckline, and you go for yourself. But I see it as following the market structure: higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Now this is a lower high because the market fails to give us a high that exceeds our previous high. This is our previous high. The market giving us a lower high now. The market giving us a lower high now. Okay, it's a tendency that this market is now in a downtrend. Okay, the market is now in a downtrend. Now, guys, I just want this to be a very quick one. A very quick one. This is already down. This is already an uptrend. Already an uptrend. Okay. Now, don't forget the simple rule from your 4-hour standpoint. Wait for the market to reverse to show you your quick formation from a very key level, whole number, quarter theory, or hesitation point. Okay. Then look for your order block. In an uptrend, your order block is the last bearish candle, okay? In a downtrend, your order block is the last bullish candle. In a downtrend, the last bullish candle, and you can see very active. This is an uptrend, the peak formation high. Just look for the last bearish candle, okay? If it breaks it, then you go for yourself. All right, it happens all the time, guys. Any pair, pick any pair, look for your peak formation. Any pair, look for your peak formation, your high and low. Okay, this is our peak formation high. Then our other block will be the last bearish candle. Okay, you pick all this massive movement. You will never miss any massive movement because you know how the big boys are doing it. All right, now this is another example. This is your low, right? Just pick the last bullish candle. The last bullish candle in this case is this. So wait for the last bullish candle to break, and then you have your profit, guys. So this is a very simple strategy. Notice the key level, then notice your peak formation high or low. Notice your order block, wait for break of structure, then you go for the trend. All right, guys. So if you need my indicator, you can contact me. So it's going to be a short video. See you another time. Please kindly like, subscribe to my YouTube channel for more content and more strategies.